What is accrual basis accounting and do I need to have it? So it's funny you should ask, because when this question came to my attention this week, I started getting saucy. And I thought to myself, what are accrual basis financial statements really? You know what it means? Cash is coming in, cash isn't coming in, and cash isn't going out, but everybody's unbelievably busy. That's accrual basis accounting in a nutshell. What it means in more specific terms is that accrual basis means that your company has done the work. You've delivered the products, or you've delivered the services. You feel like you've done the work, regardless of whether you've gotten paid. Maybe you got paid up front. Maybe you got paid at the time of delivery of their services or products. Maybe you haven't gotten paid yet, but you're going to recognize the revenue. That's another term for show the revenue on your income statement, aka profit and loss, because your company provided the products and services. So on an accrual basis, profit and loss or income statement, you recognize the revenue regardless of whether or not money has moved. Same thing with the expenses. You feel like your company has incurred expenses. Someone is out there providing services for you. You just got a big delivery today. You know you owe somebody something. And the expense shows up on an accrual basis income statement or an accrual basis profit and loss, regardless of whether the money has been paid. Regardless of whether you prepaid for those products or services, regardless of whether you paid at the time of delivery, and regardless of whether or not you've paid at all. Your company has incurred the expense. You've benefited from the services or products. Therefore, the expense shows up on your income statement, aka profit and loss. What's the flip side to this on the balance sheet? If you are recognizing revenue but actually haven't gotten paid for it, that's going to show up on the balance sheet as accounts receivable. On the expense side, if your company has incurred expenses for products or services and has not yet paid for them, that's going to show up on your balance sheet as accounts payable. Similarly, if anyone prepaid, that's going to show up on an accrual basis balance sheet as a prepay. So if your customer or client has prepaid, then that's going to show up on, but you have not yet provided the services. If you haven't provided the services, that can't show up on the income statement as revenue because you haven't yet provided the services. But if they paid for it, it's going to show up on your accrual basis balance sheet as a liability account, typically called unearned revenue. It might also be called customer deposits, unearned income. If your company has prepaid for a service or product but have not yet received it, that's going to show up. You haven't yet received it. It's going to show up on the balance sheet as an asset account called prepaid expenses, but only an accrual basis balance sheet. Cash basis balance sheets are the opposite of accrual, and they only show income when received in cash. And when I say cash, I mean however somebody pays. If the money has moved, that's what I mean when I say cash. And expenses only show up in the income statement or profit and loss if your company has actually paid them out. That includes using your company credit card. So a cash basis balance sheet has no accounts receivable, no accounts payable, no prepaid expenses, and no unearned income, unearned revenue, or customer deposits. So the second half of your question, do I need to have it? As always, there's an external answer and an internal answer. You might have to have accrual basis financial statements for compliance purposes. Accrual basis financial statements provide more of a crystal ball to the future because they show receivables. That's a window into future cash inflows. Payables show a window into future cash outflows. Also, inventory, at some point, there's a threshold by the IRS. Inventory might need to be recognized on an accrual basis balance sheet. If you're holding inventory, if you bought it but you haven't sold it yet, on the cash basis balance sheet, for tax purposes, you don't even need to show inventory. You do for GAAP purposes. That's generally accepted accounting principles. If your financial statements get audited, reviewed, you're going to need to show that inventory. But if you're under a certain threshold, I think it's $1 million in gross revenues. If you have inventory, if you're under that threshold, you don't need to have accrual basis balance financial statements for income tax reporting purposes. Now, of course, since we're talking IRS, there are nuances, and you can message me or comment in this this video thread about any questions that you might have about that. If I don't know the answer, then I will certainly find someone who does and get you that answer. So do I need to have it? You know, it depends on external compliance needs. My opinion is it's always better to have accrual basis financial statements because of that crystal ball element. Also, let's not forget that in a lot of small business accounting software, if you want to flip over into your cash basis financials, all you have to do is go click, boom, it's cash basis. As long as you have done your bookkeeping correctly. So yeah, I'm sure that Annie's clients have a mix of cash and accrual. I'm sure she has some accrual clients and some cash, and she knows how to do the bookkeeping such that you can really toggle back and forth easily between one and the other. So that's also that's available, something that's available to you.